Good morning. I'm Julie Johnson, the Expert Development and Outreach Trade Specialist for the Washington State Department of Agriculture. Thank you for joining us today for the Pricing Strategies webinar hosted by my agency, the Small Business Development Center, and the Export Finance Assistance Center of Washington. This webinar is being recorded and will be posted to WSDA's website. I will also send you the recording and the recording link and the slides when this is over. So a little bit of housekeeping, you are muted, so please put any questions in the chat box, and Zara has agreed graciously to monitor them and be the person to ask those questions. We are each going to give you a brief overview of our organization before the pricing strategy seminar begins. So I'm going to begin real quick. And if I can move my slides. So I'm with the Washington State Department of Agriculture. We have a staff of 5 throughout Washington, and we handle various stages from beginning to expert. Our 5 staff, I do the outreach, and then we have 3 trade specialists across Washington. They focus regionally as well as certain markets and also certain product sectors. And then we also have our program manager in Olympia. So what type of companies do we work with? We work with mostly small to medium-sized Washington suppliers of egg and food products, fresh and processed, and beverages, nursery, hay, and pet foods. So what work does our program do? The scope of our program is kind of 3 core functions. We have export development, which is the work that I do, and I provide resources. I do one-on-one consultations, market identification, can run top market reports, as well as export training, such as today's training. The export assistance work is done by the 3 trade specialists. They provide technical assistance. They do trade activities, inbound missions, outbound missions, as well as promotions and trade shows. They really do the buyer-seller matchmaking work. And then the 3rd core function is our market access work. And that's the government to government work done in collaboration with industry and federal partners. And although our manager she does a lot of that work, but we kind of overlap in these core functions. There's not really black and white lines. And so we kind of cover a little bit of each area. So last year we had our reps here in Washington. So here's just a picture of our team, and I'm going to talk more about them in the next slides to come. So we've decided with our state funds, we're going to have representation in Japan, South Korea, Vietnam, Southeast Asia, which covers Singapore, Malaysia, Indonesia, Thailand, and the Philippines. And then we have Mexico and Central America. We also have 4 project representatives. And so these representatives are a free service to you to help you get your products to those markets. And so it's a really great service. And I'm going to list real quick some of the things they can help you with. So they often send trade leads. They can help you with market research, pricing, which we're going to talk about in a few minutes. They can help you with guidance on shipping. If you have something stuck in customs, they can help mitigate that. Translation services. They really are on the ground local people that can help you with and have personal experience in those markets. They also travel to Washington once a year. So please look for the recruitment. They'll be coming the week of September 11th. We'll do consultations in both Seattle and the Tri-Cities. And so next, I'm going to introduce you to Zara Castillo. She's the president of the Export Finance Assistance Center of Washington.
Thanks, Julie. Good morning, everyone. My name is Zara Castillo, as Julie said, and I work for the Export Finance Assistance Center of Washington. So just a quick info about my organization. We are a non-for-profit mandated by the state to provide free advice and counsel to local Washington state companies on general information on how do you get paid by your foreign buyers and how to minimize the risks of possible non-payment. If needed, we can also connect you to the right person from your bank to make sure you're able to access different products available for you, specifically to help you get paid by your foreign buyer, or we can also connect you with other banks that would fit your needs. In addition to that, we also provide different trainings and webinars on different topics on exporting. I think a few in today's audience are familiar with some of them. So a lot of our trainings are not trade finance related because we realize that many of our clients need training on different technical skills or knowledge that is not easily accessible for them, or could cost up to a couple $100s. So we received funding from the Small Business Administration called the STEP grant to hire nationally recognized speakers and pay for their costs so you don't have to. And we decided to do that because the more companies learn more about these skills, the more their opportunities turn to an actual successful sale. And if you want to know more about those or the upcoming webinars, please feel free to go to our website at efacw.org and then click on events. But we also have previous recordings from some of our webinars available, and it should be in one of the tabs that says past events on our website. And lastly, we're not experts in everything in exporting, but we have a number of partnerships and could do referrals and introductions depending on your need. Aside from our partnerships with Julie's agency at the Washington State Department of Agriculture and Ellie's at the Small Business Development Center, we also work with the Washington State Department of Commerce, U.S. Commercial Service, the SBA or Small Business Administration, Export-Import Bank, and a few more. So just let me know. Feel free to contact me. I think we'll have our contact information at the end of this webinar. So just shoot me an email if you need any or to avail our services. And that's it. So please let me know if you have any questions. And it's my pleasure to introduce the next speaker, Ellie Ha from the Small Business Development Center.
Thank you, Zara. Good morning, everyone. Thank you for joining us today. My name is Ellie, and I am an International Trade Business Advisor with Washington SBDC, standing for Small Business Development Center. And our organization, our mission is to help Washington small businesses grow and succeed. We are a network of nearly 40 certified business advisors, and 3 of us are international trade specialists. What we do is that we provide one-on-one business advising to Washington small businesses. Information shared with us are kept confidential, and thanks to the funding from SBA, Washington State University, and a few other organizations, we provide the service at no cost to Washington small businesses. Next slide. So here's a map of our locations. We are in about 25 locations. And our 3 international trade specialists are located in Moses Lake, covering Eastern Washington, Tri-Cities covering Southern Washington, and I am based in Bellevue. I cover Western Washington. A little more background about myself. I am a certified business advisor, certified by Washington SBDC, and I am a certified global business professional by NASBITE. It stands for National Association of Small Business International Trade Education. And I hold an MBA from Penn State, focusing on marketing and finance. Next slide. All right, so that's, you just heard a little about the 3 organizations putting together today's workshop. And next, we are going to cover a few topics on export pricing. First, we're going to take a look at 3 primary export pricing strategies. And then we are going to show you why understanding the export journey of your product can help you optimize your export pricing. Then we discuss how to quote your export price professionally. And at the end, we are going to do a quick recap of the key takeaways and the resources. Next slide. You probably hear many different export pricing strategies. But we are only listed 3 here that are most common. Market-oriented pricing. With this strategy, you consider the price of similar products, and the price goes at a level that's competitive and attractive to the buyers. With a cost plus pricing strategy, you calculate all costs involved in producing the product, including variable and fixed costs. And the goal is to cover the costs and also generate a profit. The value-based pricing, typically the product has a unique value, and the price can be set based on the perceived value as perceived by the consumer. And a good example of value-based pricing is Burt's Bees brand. Next slide. We all know Burt's Bee. It's a simple product, but they engaged in a very successful marketing campaign highlighting the natural green feature of the product. And the business owner, Bert, with a big beard and living in the woods, he is a great spokesperson that highlighting the product feature. And in the photo here, the top left photo is Bert in Taiwan. This is at the airport, Taipei Airport. He's on a promotional trip in Taiwan, and the fans are at the airport welcoming him. People just resonate with his lifestyle, and that gives a higher perceived value of the product. So the product can be priced at a level much higher than similar product in the market. So if you are looking for something to do this weekend, I suggest you consider watching a documentary movie called Burt's Buzz. It's currently available on Apple TV. And also NPR has a fantastic podcast. It's called How I Built This. And in one of the episodes, they interviewed the Burt's business partner, co-founder, Roxanne. And it was a quite interesting 1-hour interview. Watching the movie and listening to the podcast, combined, it can be a quite interesting case study about value pricing. Okay, next slide. Coming back to our 3 most common export pricing strategy, which one is right for your business? It will highly dependent on the product and the industry, as well as the market condition. So, for example, market-oriented pricing, if my product is a commodity, say I sell containers of corn, I probably will have to go with market-oriented pricing. And cost plus pricing, that's the most common among small businesses. Businesses want to make sure they cover the cost and also have a profit. Value-based pricing is highly desirable and in most cases the most profitable. But it requires the product has a unique value, and the business has an effective branding and marketing program. Next slide, please. So what we are trying to do here is to better understand the export journey of the product so that we can make better informed decision about the right export strategy and the pricing point for our product. So let's walk through a typical export journey together here. Let's assume I have a product and I say any foreign buyers, if you want to buy the product, pick up at my warehouse, and here is the price. I call it an export price. Let's just make an assumption here. And so the journey begins with the buyer come to my warehouse, pick up the product, and get the product loaded on a truck. Then the truck goes to a terminal port, here let's say Port of Seattle, and clear export, and it gets loaded on a vessel. The vessel, the container ship travels across the Pacific Ocean. Let's assume it arrives in South Korea at the port of Busan. And then the customs in South Korea charge a tariff and tax. Product get unloaded and then loaded onto a truck and get shipped to the importer's warehouse. Here's the importer in South Korea. So the cost associated with this entire international journey, plus the price the importer pays for my product, adding together, we call it the landed cost. So this is the cost for the importer. And then the importer, it can be a large retailer, and they put the price on the market and make it available to the consumers. We call it a retail price. And in many cases, the importer may be a distributor. So they add their profit margin and sell it to a retailer. And the retailer add their profit margin and sell it to the consumer. So either way, here we have three prices. And the small business owners we work with, many of them say, I don't care about the journey because I want this price and people pick it up at my warehouse. The rest of the cost are on the buyer, which is true. The buyer pays for the international journey one way or the other. However, having a better understanding of the landed cost, the cost to the importer, and the retail price, how much it can sell in that foreign market, will help us optimize our export price. Now let's, so here today we have resources to help you have an estimate of landed cost and the retail price. Now, next slide. Starting with landed cost, we are going to walk through how typically how we do an estimate of the landed cost of an export product. So the definition of landed cost is the estimated total cost of your product once it lands at the importer's warehouse. And here's a formula to calculate the landed cost: CIF plus duty plus VAT plus other tax. Here, CIF stands for cost, insurance, and freight. So most tariff is assessed based on the CIF value. And the duty here, it often gets confused with tariff. We can think of it as tariff is expressed as a percentage, and the duty is the total tariff you pay. And VAT stands for value added tax. It's very common in most countries in the world. Actually, the US is one of a few countries that do not have a VAT tax. So when we are exporting, it's pretty common that there is a VAT tax. And also there are other tax. And so this duty and VAT, they vary by the product and the country we sell to. Now let's walk through an example. So say I work at SBDC, I create a yogurt and I call it SBDC yogurt. I have a potential buyer in South Korea, and I want to calculate the landed cost. So first I calculate the CIF value, the cost, insurance, and freight. Cost is my product invoice value. Let's say I price it as $1,000 for 1,000 individually wrapped yogurt. And the insurance and freight, I get a quote from my freight forwarder. My freight forwarder gave me an estimate that to ship that amount of product to South Korea, it costs $10 insurance and $100 freight. Here is just assumptions and making for the example. So that gives me a CIF value of $1,110. The second step, I want to classify my product so that I can identify what's the tariff and tax that will be applied. Here, in international trade, we don't use the product name when identifying the tariff and tax. We use a HS code. It stands for Harmonized System. I think most attendees here have probably have a good understanding of HS code already. So I looked up my product yogurt, and I identified the HS code for my product is the number listed here. And then I want to look up the tariff and tax for my product going into South Korea. Now, next slide. So SBDC advisors, we have tools to help businesses look up the information. What I did here is I used destination country as South Korea, and using the HS code I identified for yogurt, I look up tariff and tax, and this is what the result I find out. So if we look, I'm not sure if you can see it clearly. So in the top block, it says tariff treatment general rate. So this is the rate applied to all countries if they are not World Trade Organization. And I see a tariff rate is 36% assessed on the CIF value. And the second block, it says WTO rates. This is the tariff rate for exporting countries if they are World Trade Organization members, and that there is a tariff rate of 54% over CIF value. That's a pretty high tariff rate. So remember, CIF stands for cost, insurance, and freight. So at this point, I know that if my competitor from another country want to sell the product in South Korea, they are gonna be charged a tariff probably around 70% of the product value. And then we look further down, we see a United States FTA agreement. FTA stands for Free Trade Agreement. So it's tariff free. That's good news for me as an exporter in the US, because thanks to a free trade agreement between the US and South Korea, my product can export to South Korea tariff free. So the next item on the list is tax 1. That's the VAT cost we just mentioned, the value added tax. And there is a 10% tax assessed over the CIF plus duty value. Okay, now with that information, we're gonna plug in our calculation. Next slide. So we identified that our tariff is 0. So that gives us a 0 duty. And then VAT is 10% over CIF plus duty. So I will calculate 10% of my CIF value I calculated earlier, and 0 duty. That gives me $111 of the VAT. And plug in my formula here, I get a landed cost of $1,221. Next slide. So I add the here. If I sell my product at $1,000, by the time it arrives at the importer's warehouse, it would have cost the importer $1,221. Here it's a very rough estimate. And a formula included in the landed cost are the primary cost in the export process in a typical export journey. But we also want to take into consideration any other costs that may be involved. But again, it gives us some idea where it is. Now, the next, we want to know that the importer, if it costs them $1,221 to acquire my 1,000 yogurt, how much they can sell in the South Korea market. We want to understand the retail price to the consumers. Next slide. So here, what we are trying to understand is to better understand the market condition and the price of similar products in our target foreign market. And in this case, that's South Korea. How we get the information, typically we can run an online research to see how much similar products being sold in South Korea. Or we can ask our consumers in South Korea or our local partners there. Some industry associations have data and information. And we can also get on a plane and pay a visit to the local retail stores. But here for Washington agricultural businesses, there is a fantastic resource here that works actually better than all the resources I mentioned above. That's the Washington State Department of Agriculture. So I'm gonna turn it over to Judy to provide more information on that.
Thanks, Ellie. So this is an example of our rep in South Korea, so Danny Kim. And we worked with a company, it was a yogurt company, which is the example we're using in Skagit County. And they had a high-end yogurt. And so Danny's going to do some online market research. And as you see here, he's going to show you the companies that he looked at. He's going to use the Onada currency converter to go from won to US so we can get the US price. Then he's going to visit the store, and depending on what the product, because this yogurt was high end, he went to the high end market. So he went to the department stores, the hypermarket, the supermarket, and he's going to list which ones he actually went to. If, he might go to the convenience stores. Convenience stores are really popular in Korea, and there's a lot of them. And so depending on what your product is, those are the markets he's going to visit. So then he's going to send some screenshots of the online marketing research that he found. And he's also going to visit, like I mentioned, the different stores. And so he's going to send you pictures. What does it look like on the shelf? It's really key, depending on what your product, if it has to be in cold, if it's a refrigerated product, you want to make sure that there's enough, refrigeration where the product is going to be actually going to. So then he's going to send a spreadsheet such as this. It's going to list the product, the photo, size. So he's going to look for like products, like size. He's going to list the Korean price and then the converted price, and he's going to put the date. And so like Ellie mentioned, this is going to help her when she works with you to come up with the price. This piece is going to help her help you decide, a good price to charge, I guess. So here's a couple examples. He also went to Costco, and there's a Kirkland brand. So that's a much larger size, but it just kind of helps you give the spectrum of the different prices. And so this information is going to come to the company who requested it. Ellie might be, or her colleagues, if you're working with her colleagues as well, they might be CC'd, but if not, obviously you can share that information and that'll help them help you. So our other reps do this as well. Japan, she does the same thing. She's going to visit the market. She's going to research online. She's going to check the retail prices, competitive products. She's going to clarify taxes, duty, transportation, and any other costs, take photos, and then she's going to compile. So she, as in Avia rep, so Keiko is our rep, she's going to compile information and then send it into a spreadsheet such as this. Now, I just captured one piece of it because if I recall, I think she sent 10 different comparisons, and her example was a granola bar. And so here you see she also priced energy bars. And so she's included like a pack of granola bars as well as the individual price. Now for Mexico, if you were to work with our Mexico, I know they have a service that they work with to do this work for them. That being said, they all may do it a little bit differently, but they all can provide that service. So now I'm going to hand it back to Ellie.
Thank you, Judy. And so working together with Judy and with the help of their overseas reps, we get some market intelligence on the retail price in South Korea. And let's assume that after reviewing the pricing information provided by Judy and his team, I find that products of similar size imported from the US are being sold at roughly $3.50 to $4.40. Now remember in my assumption, I said 1,000 yogurt. So multiply by 1,000, I get 3,500 and 4,400. That's for the comparison reasons. So now the importer, it costs them $1,221 to obtain my 1,000 yogurt, and they can potentially sell it at 3,500 to 4,400 in South Korea market. That seems a pretty large gap, a room for profit for the importer. And also, it's possible that the importer and the retailer, they can afford to sell my product at a price point much lower than a similar product in the market. That is possible. So at this point, I want to consider how I want to position my product in the South Korea market. Maybe my product has some unique feature and I don't really want to compete on price with large mass producers. So at this point, it makes sense for me to seriously consider increase my export price. And it would be beneficial to plug in the price number and run a calculation on my company's income, profit and loss projection to see how it might impact the bottom line of my business. So let's, in this example, it comes up back, the retail price is much higher than landed cost. What if it comes back lower or very close to the landed cost? Next. So it's actually quite common. We see that the retail price come very close to the landed cost. What if the retail price in this example comes back as $1,300? What do we do in this scenario? Next slide. So if our audience have any thoughts here, you are welcome to share in the chat or unmute yourself. What you would do in this scenario. You sell your product at $1,000. It costs the importer $1,221 to bring the product into South Korea. And a similar product is being sold at $1,300. In this case, what should we do with our export price? All right, we're just gonna move on. I have 3 potential solutions here. Next. So number 1, first option, the landed cost is too close to the retail price. There is not much room for profit for the importer. And I figured maybe that's why the potential buyer, they tasted my product at a trade show, they really liked it. But after receiving pricing information, they never responded to my email because they don't have money to make in this if they import this product. So I can focus my energy on another market or on my domestic sale. But the second option here is that I can offer a special export pricing that's lower than my domestic wholesale price. And there is actually a term for this. It's called a marginal cost. So when we set our price of the product, we take into consideration the fixed cost and the variable cost. So with the marginal cost assumption, we assume that the fixed cost of running my business have all been covered by my domestic sales. And I have excess capacity my machine and my employees are still sitting there or being paid if I don't make this export sale. And so in this case, I will drop my price and make this export sale to fully utilize my production capability and still make a profit. So it is possible, but in this scenario, we encourage business owners to first carefully run a calculation of your production cost to make sure you are making a profit. And secondly, in this scenario, we encourage business owners to have a better control of the export journey to make sure the product do travel to South Korea, to your target export market. You may not want to do Incoterm Ex Works and have the buyer come to your warehouse to pick up the product, and they take care of the rest of the export journey, because you never know, the product may end up in California competing with your domestic sales. And the third option is that you can convince the importer that you can help them sell at a premium price. So when you try to make the sales and pitch the sale to the importer, you can let them know that I already know this product, similar product is being sold at $1,300 in South Korea. However, my product is unique. It has a feature that can't be offered by the mass production, and you can sell the product at a premium price. And here is my marketing plan, and here's how I can help you achieve that. So that's another option. So with this information, we can come back to adjust our export price and optimize our export sales strategy. Next slide. After deciding on your export strategy and the pricing point, we want to make sure that we quote the price professionally. And in international trade, we want to get two more pieces, take into two considerations before we quote the price in a pro forma invoice. One is to consider our preferred Incoterms, and the second is our preferred payment terms and method. So Incoterms stand for International Commercial Terms of Shipment. It's a common set of rules and guidelines for the global transportation of the goods, and it defines where the product will transfer and risk will transfer from the seller to the buyer. Next slide. Here's a chart of the Incoterms. There are 11 terms, and it will take another at least 2 hours of workshop to discuss in detail the 11 Incoterms. We won't have time today, but there is a fantastic opportunity coming up to help us understand this. I will turn it over to Zara to share more information.
Thanks, Ellie. So as Ellie said, Incoterms is very important. There's 11 standard rules for Incoterms, and we can't teach you guys every single because it will take a long time. But next Wednesday on June 14th, we have a training webinar on Incoterms. And this webinar is hosted by my organization, but the instructor is Mike Alaka, who is the person known in the industry providing this training. I will put the registration link in the chat box right now. It's free. We're paying Mike, but you need to RSVP through registration. So I will highly recommend that you guys take this class to learn more about Incoterms. Let me know if you have questions regarding that. And then next slide, please. I think, okay. So I'm not going to go into details or not even go into details about payment terms and methods, but in determining your prices and also when you provide your quote to your buyer, you need to make sure that you know what your payment terms and methods are. Because today's webinar is about pricing, we're just putting in the different types of payment methods that you can use when you're exporting. The definition is here. Please let me know if you have any questions. I've also put like a diagram on which types of payment methods would be less secure for you as a seller, but more favorable for your buyer, and then vice versa. But also just think about export credit insurance in the process of that. And you will have a copy of this. Next slide, please.
All right, thank you, Zara. So after considering the Incoterms and payment terms, we want to put other information in a pro forma invoice. A pro forma invoice is a preferred method for providing quotation in international trade. So it provides more information than a domestic quote. It addresses some unique issues in international trade, including the Incoterm and payment terms we just mentioned. And also your foreign buyers, they may need the document to apply for an import license or open a letter of credit or to purchase US dollars in order to pay you. Next slide. Here's an example of a template. There's no specific format you have to use, but typically it includes this information on the seller, the consignee, and the buyer, and a list of the product and description price. Next slide. And also it includes the Incoterm. Here you see I just assumed the Incoterm. I chose the FCA and the Port of Seattle. And the method of payment. It also here in, I don't know the date of shipment yet. I can just include to be discussed. And also importantly, I want to have an expiration date of my quotation. My quote is not valid forever, especially when we face high inflation. And it's always nice to add a note here. I don't know if you can read in note number 1, I put please advise of any special documents or standards required to clear customs in your country, as this might involve extra cost and affect our shipping date. It's good to put it here early in the process so that later if there's any issue clearing the customs, you can refer back to this document, how you brought it up early in the process. And the document is signed and dated by a responsible person at the company. Next slide. All right, so we took an overview. We did an overview of 3 most common export pricing strategies. And we explained why understanding your product's export journey and have a rough estimate of the landed cost and the foreign market retail price can help optimize your export price. There are resources here to help you in that process. And lastly, we discussed that to quote your export price professionally, you want to give consideration to the Incoterms and the payment terms and put the information in a pro forma invoice. Next slide. And it's a lot of information today. We try to condense the information as much as we can, but no worries if you feel a little lost in this information. We are here to help. Julie and myself and Zara, we work very closely together. With that, I'm turning back to Zara, right, for questions?
Yeah. So everyone, if you have any questions, please feel free to type them in the chat box. I will read them aloud and have either of us answer. Now, earlier there was one question. I'm going to read it out loud just in case other people didn't get to see that. Does the cost of the product include your margin? For example, does the cost of what you would sell in the US or like your domestic price? And Ellie responded to that. She said, yes, for today's webinar, think of the export price in the example as your wholesale price. It includes the product cost and your profit margin. And so I got a private question, or someone sent me a question, and I think this one's for Julie. Is there a fee for working with your in-market reps or your trade reps, and how do I get in touch with them?
Great question. So no, there's no fee. WSDA pays their contract fee to help Washington food companies get their products to the market. So you can reach out to me and I can connect you as well as any of our staff. You know, Zach, Lisa, or Rebecca is happy to connect you as well. Their contact information is also listed on our website, but sometimes it's helpful just to have that introduction from us. You know, it may get them to respond quicker, I guess. So yeah, feel free. We're happy to connect you at any time.
Okay. And then I have another question. I think this one's for Ellie. Is there a place where I can go to determine what my HS code is?
Yeah, and just a reminder, HS code stands for Harmonized System. It's an internationally recognized code to classify the products, and the tariff and tax are assessed based on the code, not the name of the product. So we can think of HS code like tax filing. There are tools out there. You can DIY, identify your the HS code for your own product. But if you get it wrong, it can be costly. And there are licensed professionals out there to help, but eventually it's the business owner's responsibility to make sure to classify the product correctly. And the licensed professionals, they are typically the customs brokers and freight forwarders. They are licensed and they can help with that. And SBDC advisors, we are not licensed, but typically when we work with small businesses, we are happy to provide the tool to show you how to look up the information. There is a search engine, actually you can enter a description and to see what's the most relevant code. So we are happy to provide the information and show you how to do it by yourself. But if you are not sure or not completely sure, we're happy to show you the resources where you can get help to get a ruling or get help from a licensed professional.
Can I add one thing there? The reason they have those codes is so the world is kind of talking the same language, because for instance, like hard cider in Korea, they think of that as apple juice. So if you all are looking at the same code, then you know you're comparing like apples to apples. So I just wanted to add that clarification for the HS code.
There's a follow-up question. How often should you recheck your HS code?
I'll give that to Ellie.
Yeah.
Frequently. It gets updated frequently.
So would you say that you should check your HS code each time you quote a price?
I would say quarterly.
Okay, quarterly.
Yeah.
I have another question. Does SBDC help companies to import products from the foreign markets to the United States?
We actually get that question a lot. So first, to import products into the US, in most cases, we encourage business owners to work with a customs broker. They help you clear the customs. At SBDC, we can explain the different categories of imports and how the process work, so that after a discussion, you will have a clear understanding of why in most situations with a commercial import, you will want to work with a customs broker. But again, yeah, we are happy to discuss with business owners to help them understand the process and the potential costs that may be involved. But to help with the actual process of clearing the customs, that would be a licensed customs broker.
Okay, thank you.
Mhm.
So there's a question, and I think this one's for me. Do you have any advice for a strategy on how I can get my buyer to agree on a higher price? So one advice that I would say, because this is how you can incorporate your payment methods or your payment terms, is if you look at the diagram, you guys will get the slides later. If you sell in an open account, which means that your buyer will be paying you after they receive the goods upon shipment or upon delivery. If you sell an open account, that's favorable for your buyer, and you're able to actually set your price at a higher price because that's kind of a leverage that you have. But then again, on your end, that's very risky because you might not get paid. But fortunately, there is export credit insurance and Export Import Bank, which is a federal agency. I know it says bank, but it's a federal agency. They offer export credit insurance at a very low cost. So you could actually get your goods covered up to 90% of non-payment. And if you don't get paid by your buyer, if you have this insurance covered for those goods, you can get paid by 90%. So in a way, your buyer doesn't know that you're doing export credit insurance, but that you're offering them an open account terms. Now, when you get an export credit insurance, there is a premium cost to that, which is very minimal. And that premium cost, you could actually bake that into your pricing as well. So that's just one of the strategies that you could incorporate in. I have another question. This one's for Ellie. In your experience, what are the costs? What are the costs that a lot of your clients neglect to add to their export pricing? And I'm just asking to make sure I include them.
Yeah, that's a great question. So that comes back to both domestic and export pricing. So we sometimes work with business owners. They take into consideration of the variable cost of production. Here, by variable, I mean the costs associated directly with making this batch of products. So, for example, material, labor, that's the variable cost. And most businesses take that into consideration when pricing that product, but neglect the fixed cost. Fixed costs are costs like rent, your depreciation of your equipment. Those costs still, where does that come from? It still comes from the sales of the product. So do need to take that into consideration. So that's in general, domestic and export. And then for exporting, we want to take into consideration that the unique costs in addition to the transportation and tax we just mentioned. So typically, for example, the export documentation, a common documentation is the certificate of origin. Some importers require that document. It's reasonable to charge a fee for the document. And if there are any other certificates or documents required by the importing country in order to clear the customs, it's reasonable to charge a fee for that as well. And also, if you need to modify your product for that specific export market, it's important to take into consideration any costs that may be associated with that. And the special packaging, that's another area. So yeah, these are the most common ones.
Ellie, when you say special packaging, is it like when you have to make new labels? Is that kind of part of that special packaging? Or if you have to, usually you ship in cans, but then they require or sorry, if your product is usually sold in cans, but then your buyer is requiring to have it in a bottle instead, is that when you mean special packaging?
Yeah, that's part of it. And also for my goods to be able to endure this international journey, I may need to do extra work in packing the products to make sure it doesn't get spoiled in the process. So and also the importing country, they may have requirement that I used to use wood pallet, and that doesn't work for that country. It has to be specially treated, and I have to get extra specially treated pallets or other materials. So those costs, we want to take that into consideration as well.
Got it. I think Julie has something to add, but I do have a question for Julie. If she
Okay.
has something. Okay. This question, I'm pretty sure it's for Julie. I don't have pricing questions yet, but I have a potential buyer from Japan. Would you be able to help in vetting them and see if the buyer is a legitimate business?
Yeah, that's a great question. So, really, it's really key for you as a exporter to do your due diligence. And so our reps can help with that. I mean, they're going to do their research, their due diligence. The Agricultural Trade Office, in some of the markets, they keep valid lists of buyers. So it's really worth the extra step to reach out to our rep, to reach out to the Agricultural Trade Office. The U.S. Commercial Service, they also, in some of the markets, have a Gold Key service. That's a service that you can pay for. So I always say use the free services first, right? So reach out to the Agricultural Trade Office. I can connect you with them as well as our rep. And then if you still aren't feeling quite right, maybe it's worth paying. If you think this is really a really good potential long-term buyer, maybe it's worth paying the Gold Keys, fee to actually do that service as well. Really, a lot of it is go with your gut. If it seems too good to be true, then it's probably not true. So hate to say that, but it really pays to do your due diligence. I guess I have a quick story. Is we had a rep, this was a while ago in China. I got contacted by a cider company, and they received this great looking contract from a potential buyer, and they sent it to their attorney, and their attorney was looking at it, and they happened to reach out to me. We had our rep do his due diligence and found out that they weren't a valid company. So even though they have a really good looking contract, that doesn't necessarily mean that they're an above the board business. So it really pays to do that extra work. Thanks, Zara.
Thanks, Julie. And this was my last question. Do you need to include, I think this is for Ellie, do you need to include the neglected costs in wholesale price? Must you define these on a pro forma form or a pro forma invoice?
Yeah. So the cost, if it's directly associated and it's part of making the product, then you want to include it in the product price. For example, if you say I sell my yogurt to South Korea, and I need to print a new label for this export sale, and the label gets attached to the product. I want to include that cost in my product cost as listed on the pro forma. But if it's an extra cost that's not part of the product, for example, if it's certificate of origin, I decided to charge the buyer $100 for that, then I can list as a separate export documentation, $100 as a separate line item on my pro forma invoice. And also my if I'm in if I'm going to send the product, say, to Port of Seattle, and I want to charge inland freight transportation, I want to list that as a separate line item in my pro forma invoice as well, instead of adding it as part of the product product price. The reason is that when we looked at the formula earlier, when the customs assess the tariff and the tax, they are based on the CIF value in many cases, and that's the cost, insurance, and the freight. So for any extra cost that's not part of the product, I want to itemize them clearly so that the customs in that foreign country can assess the rate on the right value and won't overcharge my customer or my buyer, foreign buyer.
Great, thanks, Ali. So I think that is our last question for the day. It's 11:01. Thank you for sharing an extra 1 minute of your time with us. I'd like to thank all of the attendees today, our speakers, Ellie Ha and Julie Johnson, and also I'm giving back the platform back to Julie to do the closing.
Yes, I want to say thank you as well. And I just noticed I forgot, we had talked about adding our emails. So before I send you the slides, I will add our contact emails so that you all will have that. So I apologize for that. And thank you for spending your morning with us and have a great day. Thank you so much.
Thank you.